Hello viewers, today we are continuing with our series of management decision and control, and last time we had finished with the ABC system and the traditional costing systems, and today we are going to look at a combination of the ABC system and the customer profitability analysis, or the CPA, customer profitability analysis. And we have already looked at the ABC system and we know how it operates. And now we are going to know how to use the ABC system when we go to the customer profitability analysis. In other words, how can we incorporate the ABC system within a customer profitability analysis, or when we are analyzing the profitability of each customer or a segment of customers? So, customer profitability analysis involves identifying the various costs incurred specifically in relation to servicing a specific customer or segments of customers. In other words, here we are looking at the costs that are being incurred on a given customer, and we want to know the costs we've incurred so that we can possibly know how much we are getting from that same customer or from that segment of customers as a whole. You may be working on a project, maybe you are supplying, let's say, furniture to a school. So want to find out at those certain schools you are supplying furniture to, how much are you incurring in terms of the cost, and how much do you get in terms of the profit? Whatever we do, when you do that, that's what we call customer profitability analysis. You are trying to measure how worth certain customers are to the organization or to the company or to you as an individual who does the business with those customers. So basically, that's what we do. But within the customer profitability analysis, we are seeing that the customer profitability analysis is a tool from the management accounting. And for it, it shifts the focus from the product line profitability to individual customer profitability. And that's what we call customer segmentation. In other words, we group customers in different categories, and we see how much we spent on those customers, and we see how much we have actually got in terms of profit. So what we do here is that we shift the focus from the whole production, or the whole system, or the whole sales that we are making for the company as a whole, and we go to the specific customers. If, let's say, you've been like Coca-Cola, you are producing very many items, you are focusing on the customers who are taking certain items. Maybe you are supplying to them. How much do you incur in terms of the cost, and how much those customers give you as a profit? So that's what we actually look at under the customer profitability analysis. Maybe we can try to look at some of the benefits of customer profitability analysis. Why do we need to do that? Why do we need to analyze our customers to see how profitable they are to the company, or how worth they are to the company? One, it empowers the entity to better prioritize its retention efforts to high value customers. And that is done through dividing its customer base into customer segments based on the value each customer generates. Here you try to know which customers you can maintain. If let's say in terms of the crisis, maybe there is scarcity, you have some customers who you know that these customers, they have been giving me good margins. So at the end of the day, even if there is scarcity, I'm supposed to be giving items to these customers because they have been loyal to the company and they have been giving me much margins or much profits. So it helps us to prioritize, and we know there is a customer base that we are going to focus on more, and there is other customer base that we are, maybe these customers, they come once in a while, and when they buy, they come and they start bargaining on the prices, so you end up getting less margins. So we prioritize and see that this group of customer, it is giving us, doesn't give us maybe more, we don't incur more costs on it. At the end of the day, we earn a lot from. So we can prioritize and we say maybe these ones, even if it is in times of scarcity, we have to retain these because they have been giving us good margins. The other one we can look at is it optimizes an entity's marketing strategy. In other words, it helps the entity to identify the most profitable customer segment. Then they work on attracting the similar high revenue customers. In other words, if at all you've been having a school that has been maybe giving you or buying more products from the factory, and those people, they have been giving you higher margins. So as a company, we shall look at, or we shall focus our marketing, or we shall look for those same customers that are within that category that are going to give us the same margins, just like what these other customers are giving. So it helps to focus the marketing strategy. Instead of marketing to all the groups of people, if let's say you are putting the ads, maybe you are using Google ads or Facebook ads, you make sure that in the customer category, you put the number of people you want that advert to reach to. It will allow Google or Facebook to forward that information and they get to the right people that you want to receive that same advert. So it means that you are going to be attracting the same customers who are going to be giving you higher revenue. So, and that can only be done when we do a customer profitability analysis. And we see that these customers, a category of this kind is the one that is giving us more revenue as compared to the other. The third one is it helps the entity to analyze customers so that to see the value they get from them. You may find that we've seen maybe the number of customers we have. If let's say we have 1,000 people that are buying from us, but within those 1,000 people, we have maybe 50 people that are buying. Maybe they are buying on a daily basis. And when we get a cumulative figure from those customers, we find that they are giving us a higher margin. So it helps us to know which customers are giving us a higher value, or that are going to be, because those customers that are giving you more sales or more revenue, they are the ones that you are going to look at and say that these are my valuable customers. And you can only do that by doing what we call the customer profitability analysis. And that helps the entity to come up with strategies for their high-level customers, such as giving them discounts and vouchers to such customers. What that means is that if you know that maybe these customers, they are the ones who have been loyal to the company, they have been buying all the products, even if the quality maybe turns out to be not all that right, they don't always over-complain. You find that at one point, you can develop a marketing strategy that is going to reward those customers that have been loyal to the organization. and maybe by giving them discounts on their next purchases, maybe providing them with after sales service like transporting the goods to their premises, and all that you can actually give to these other customers. So that alone creates some degree of importance within the organization under the customers. You find that some customers are going to be more important to the organization than some customers because of the level of their purchasing power or their ability to buy from the customer with a higher turnover. So the last one we can look at, it helps an organization to optimize and reduce costs. And it's done by identifying how much is customers costing an organization in a customer servicing, marketing, and even product delivery, if any. What this means is that if at all there are some customers, they have been buying goods, but maybe the distance they cover from where they buy the goods to where they are taking the goods, it is costing the company a lot of money. You can decide maybe to remove some of the customers, and you know that such and such a company is buying from us, but we are incurring a lot of cost in its sales. It may be in terms of the service delivery, we are providing transport after service, or the transporting their goods to their premises. We are incurring a lot of money. So it helps to know the costs, and you see the possible ways you can try to mitigate such costs or to reduce or to minimize such costs that you are incurring. So it's a bit theoretical aspect, but we need to also to get to it because we are going to be looking at the only computation part is going to be in a sense where we are seeing that we are introducing in the ABC system. So the other item we can look at, maybe we said that one, the fourth one we finished. That's all we have to know for the benefit of customer profitability analysis. Maybe just to have an overview of this customer profitability analysis. We are simply saying that we want to segment our customers into different groups so that we understand them better. In other words, we group these customers into different groups, or we put them into different categories. The criteria may be to the company, but we put them in a certain groups. But since they are customers, the criteria we use is mainly on how they buy to the company, or how much they spend to the company, or they buy. So but what you have to know is that if you cannot maybe segment your customers, you cannot know the value you get from those customers. For example, we may look at maybe at a university or a tuition provider. If let's say it is a tuition provider for CPA, and they are providing services, or they are assisting the institute to provide classes for students that are attending CPA. Or let's say it is just a university that offers different courses. And you may find that maybe that university or college is providing maybe services for CPA, is providing for CIMA, is providing for SCCA, is providing for CFA, is providing for this one for marketing, and others. So, as an institute, we need to know which course generates a higher revenue or a profit among the courses that are being provided by the institution. If it is a university, as we said, and it is providing CPA, SCCA, CFA, and CIMA plus others, we need to know which of those courses is providing the institute or the college with the highest margins or with the highest profits. In other words, that will be the course that is more valuable to the institute, because without that course, then the institute will not be getting more money, because it's one of the course that is attracting more students. So we need to look at among the courses that have been provided for at that university or college, which one is providing more profits or which one is bringing more students. So if you realize that the profits may be for SCCA, or what you generate from SCCA, it is maybe 2 million shillings. And the profit maybe you get from CPA is 5 million shillings. And probably what you get from CFA is, let's say, 1 million. Then, as an institute, you will have to realize that the CPA is going to be giving the most profit, or it is the one that is more profitable to the organization. So what will happen is that as the institute, after realizing that the CPA is going to be the one that is more profitable, then instead of us spending all the time in providing other courses that are generating even lesser profits, or that are bringing in less sales, as compared to spending more time and resources on the CPA that provides more profits. So what this means is that what we can do as the institute, if at all we've seen that CPA is the one that is bringing more students, or is the one that is giving us more revenue, we can put all the resources, we focus most of our resources on that course, because it is the one that is having more revenue that the organization is in, or the institution is receiving. So therefore we need, if it is a customer, if customers keep on maybe buying goods and services, and we end up not even giving them discounts, being maybe loyal, then we may end up maybe losing the customers to our competitors. Because what this happens, if at all it is the CPA that is bringing in more revenue and you don't put more focus on it, it means you will make even these students who have been coming to reduce in numbers. But if you prioritize that course and make sure whoever comes in passes, then we are going to be having more numbers, or even those same customers are going to be forwarding more or referring more customers to come and join the institute, because of the good service and the pass rates that the institute registers. And this is as a result of the institute putting more emphasis or all the resources on that course that is more profitable. So that's how it is. And so as a company, we need to analyze our customers and see how we serve them according to the revenue we get from them. Because if at all we can't just be serving customers at, maybe we give them all the service at once. We base on the customers that are giving us higher margins, we also give them priorities. Just like the way maybe you are seeing URA. If you see that the Uganda Revenue Authority, it has that certificate it gives to companies that are compliant and they are doing everything right. So you find that even if they are doing some importation, some of the goods, they have that certificate that can allow them to do the things because they are they don't even put more emphasis on them because they know they are compliant or they do what is right. So just like that, it is the same way we do here. But what we need also to look at, we need also to look at other products and services that we offer. We analyze why those products are doing poorly. Hence, we provide more strategies on how we can improve their performance. And when all that is done, and we still see that they fail to rise the desired returns or profits as expected, then we can go ahead and close them off. Because at the end of the day, we don't generate money from it. What this means is that if you go back to the university that we are talking about, providing SCCA, CPA, and all that, and we found that CPA was bringing more cash flows in the organization. And these other ones, they were not, maybe they were bringing, but they were not all that much. So what we can do is that we find a way of not leaving these other courses that are providing for us some small revenue, but we look at laying out some strategies that are going to help us make sure that we get more returns from those courses. But if we do all the strategies that are all in our means, and you find that still those courses are not bringing in cash flows, then what we can do is to close some of the courses and we focus on what is more profitable. So that's it. We don't just completely ignore maybe the customers who are bringing in all the low profit customers, and we completely ignore them. We can maybe try to give them some motivators to see that they are going to be to buy more as compared to what they have been buying. So, for example, we spoke of the institute, and maybe the other example we may look at, if let's say it is a company, or it is a group of company which has some other branches or divisions that are producing different products. You find that some of the departments or the divisions, they are performing poorly. And the reason why others are performing, maybe they are performing poorly, maybe they are lacking some cash. Or we've seen, if let's say maybe they have been maybe given less resources, if at all we can increase their resources and we see that they are still not performing well, then we can end up closing them. Just like you are seeing companies that are having different branches in different countries, you find that the reason as to why they end up closing some of the branches, they do this customer profitability analysis and they look at how much we are getting from, because now for a group company, you find that these other companies that are within different countries, they become branches. We see that how much is the branch costing the company. If at all they see that the branch, they have done all they could to make sure that this branch is performing well, but it doesn't actually perform, you find that they close it. So there are so many other things they base on, but even this is also can be used to analyze what the performance of such customers are the organization. So for examination purposes, the examiner may bring more customers and tell you to explain the strategies that we can use to improve on the least profitable customers. Because what will happen, they will give you a statement to compute the profit for the company for the different products. And they may tell you to advise on which strategy the company can take on to make sure that those that are performing poorly can improve. So that's one of the ways that the examiner may ask this, or he can also tell you to advise on the customers who are more profitable to the business. And all of that will be done under the customer profitability analysis. because they are whenever they are talking about the customers that are going to be more profitable and others are not profitable, then they may ask you to make an advice. Is it okay we close off some of the other customers, or it's not? Because also closing off a customer, we can't close a customer who has been profitable. If let's say the customer has been providing, maybe they have been giving us some cash, and when we less off the expenses that we incur, we find that there are some profits. It means we can't just close a department that is providing profit. We only find ways of how we can improve or we can make that branch to perform better. But we only close the branch if, let's say, we've tried to put in all the means, but the branch is still performing poorly, or it is incurring losses. So that's all that we can talk about as far as seeing the overview of the customer profitability analysis, because that's what we need to know from the customer before we actually go to these other aspects. So we need also to look at the involvement of ABC method in the customer profitability analysis. How are we going to involve the ABC method in the customer profitability analysis? How are we going to include that? Remember, the ABC system is only used to absorb the overheads, meaning it's whenever we see the overheads is when we are going to enter is the only way we are going to be using the ABC system. Just like the way we say that the traditional costing system is outdated, or it has been phased out because of the introduction of technology and production of more units of products. So that's why we are no longer using the traditional costing system or absorption costing, because of the reason that we gave in the previous videos. So we are going to see that the ABC system is used in the allocation of overheads under the customer profitability analysis. In customer profitability analysis, they still bring overheads, and we said we only analyze overheads using the ABC or the traditional costing system. But the traditional costing system was phased out, and even if the examiner didn't tell you to use the ABC system, then you must know that it is the one that we are going to be using whenever it comes to overheads. So that's all we need to know as far as the customer profitability analysis is concerned. So we have maybe a simulation that we can look at that, but this one we are going to look at it in the next video, and we don't want to make this very long, because it is very short aspect, but we need to understand it critically and we be able to analyze it and to understand everything. So the simulation we are going to first look at is going to be from June 2022, question 4B. I always encourage students, maybe this is part of what I'm going to be doing, is whenever we are doing some of these simulations, we try as much as possible, if at all the topic is not all that hard, we try as much as possible to do past paper numbers within our classes. Because the reason why we are doing so is that by the time it reaches, maybe we have completed the syllabus, you have very few numbers to attempt. We have attempted most of the numbers. That's why you find that on just a small topic, we do like 3 numbers or 2 to make sure that we are increasing the coverage. By the time you try out the trial numbers as we have them, you can see that things are going to be easy because we have done a lot of numbers under classes, and we are seeing that most of the, and these numbers that we pick out, they are numbers that you actually look at and you say maybe they are more different from what we have skipped, because you may find that the number which is in March, it is more or less what we have done. The only trick is maybe one or two that you can be easily sorted. So we are always going to be doing more numbers so that we can be able to get what we want. So if you haven't subscribed, please make sure you do, because there are so many things that are going to be coming in, and we need to go through together, because if you don't subscribe and you don't maybe get notifications on when we upload some of these videos, you may end up missing, because the things we said we go step by step. We are not jumping from A to Z. We are just moving from what is starting to the last bit of the syllabus. So we are just going on a step by step. So you need to have notifications on so that you can be able to get updates on the next video, because everything is just coming. That's why I call them series, because we move on a step by step. We keep everything from the beginning. What we had is related. We find that the first one is going to be the first one, and the second one will be the second one, and they are going to be in the same order so that we don't get lost. We don't keep jumping questions and jumping the topics. We are going on a step by step, but we are just following a guideline. For those who doesn't have the syllabus, you can check on our Telegram channel. We made sure that everything is available there. Even question papers, you can go there, download, and see what you can do. Thank you for watching. Until we meet again.